What's going on, everyone? CryptoVatsik here with another technical analysis video for you today. As always, nothing of what you're about to see is considered financial advice, and they're just my opinions. If you do enjoy this content, I would really appreciate it if you smash that like button, and don't forget to subscribe to the channel for future updates. With that said, let's get into some charts. Okay, today I'm going to be covering the memecoin PEPE, however you pronounce it. I don't normally cover meme coins, but from a technicals perspective, I thought this one looked pretty interesting right now. So right off the bat, I've highlighted some areas of key levels of resistance or support, denoted by the dotted line here, the solid black line here, and then the third down here, as well as an intermediate level in here that I'm working with currently. It's always good to go back into history and just get some levels for reference, and then apply that to the current price action that we're working with. So right off the bat, starting down here at the bottom, we had our area of accumulation in the yellow box here, which really formed our bottom. Okay, we had two attempts after forming the bottom to breach it. It was able to hold. We had this massive impulsive spike up that broke two significant levels. So first off, the level that we had first broken stemmed from back here in June 2023. We had some area of consolidation, bearish consolidation at that level again over here in August 23. And then once we were able to break that level of prior resistance, clearly failed at this point with this high. Once we were able to break it with confidence, we were able to shoot right up to the next area of interest with a clean retest and continuation of the move. So definitely liquidity was able to build up in the accumulation phase here in yellow that really powered this move. So a very critical level that we wanted to see flipped and get out of our bottom accumulation area. So the next level that we had some consolidation for quite some time, when we pushed up to this high and then we eventually put in our bottom of that correction, we had some nice consolidation that led to this next powerful move, which again, just looking at level to level, we were able to reclaim this important area of support with 1, 2, and 3 attempts to break it, or 3 confirmations that it was holding a support. We had a nasty swing failure pattern up here on this candle on November 9th. Pretty huge wick up to that next area of resistance, this breakdown level. Okay, this is the point of breakdown over here. Price typically likes to be attracted to points of breakdown or points of breakout. So that's why I've marked this level here, okay? And we actually had another test of it over here. So a nice sweep of that liquidity, clearly still acting as resistance at the time. And then what is really just our consolidation, or putting in our correction, okay, between our first major high and then our eventual bottom here, which led to our high time frame market structure break on the daily time frame here. We put in a lower high after our high up here, another lower high, and then a third lower high on this downtrend that you can see that I've marked out here, okay, downward diagonal. That was ultimately broken with a fresh higher high in comparison to this previous lower high, okay? So there's your market structure break on a higher time frame, confirmation that the downtrend is over and price is looking to continue. So right now what we're doing is we're pretty much just working on another correction. And what I've done is I've marked out this resistance block where we've got multiple wicks above head here. We're not able to candle close above that level. Had a bearish market structure break from these higher lows, the final higher low being right here and broken on the following bearish candle here. Okay, so we broke that market structure break. We weren't able to put in another higher low and continue. So we've broken it. We lost that prior area of resistance, which was here temporarily support. We have now lost it. We've put in a bearish retest and it rejected cleanly off of it. So that's fine. In my mind, it's all kind of short-term things, because what I'm interested in is looking at the overall high time frame picture here. So we've got our area of accumulation, impulsive leg up. We had our correction, impulsive leg up, and what is now, I believe, our next correction. If we look at the fib, so if we take the fib from the high of the leg down to the low, okay, or otherwise from the beginning of the leg to its current high, we look at the 618 fib right here, okay? So all I see is us just interacting with that same fib right there, that 618, which is a typical fib level for cryptocurrencies to retrace to. And if we look at the area that we rejected off of, it's a pretty significant area, okay? It comes from this breakdown level that we had back here, okay? This area of support that we weren't able to hold here, and eventually broke down on July 2023. So naturally, price is attracted to breakdown areas, breakdown levels, point of breakdowns, whatever you want to call it. So we've come up and we've swept it nicely, okay? But on the first attempt, it's not expected that we're going to just reclaim it easily, because quite frankly, above that level, there's not a lot of resistance to work with. Once you start looking above, once we reclaim that region or this level and we start bouncing around in here with the next area of resistance, which all that I can see is from this prior high over here and then these two attempts to breach it here. Above that area is kind of clear skies in my opinion. There might be a few little areas you can look at, but ultimately from a macro perspective, I think the momentum will shoot up after we've had a significant amount of time for accumulation and investors to really put some volume in that are going to hold long term, even on a meme coin such as PEPE. So I think it's perfectly natural, perfectly healthy to put in some consolidation and further correct before our next leg up. So, I think that a few really key things have happened here. If I look at this chart objectively, we've reclaimed a major level that was basically the first objective of this, coming out of our accumulation in yellow here, breaking out of it with, quite honestly, with ease, reclaiming a next area of breakdown, okay, on the second line here, okay, reclaiming it, consolidating, accepting it as support, and then breaking out to the upside with another impulsive leg up. And where I would have actually expected price to really stall out, preemptively would have expected it to stall out again if it was going to swing fail, but I don't think this is not a swing failure in comparison to this high. This is a new leg that's either in the making or is now completed. From an Elliott wave standpoint, it looks like it could be a third leg. If you take your first leg here, your secondary correction leg, your third, fourth, and then perhaps fifth up there. I could see something like that forming for a 5-wave Elliott wave structure. The third wave right here doesn't necessarily look convincing to me, to be honest, so I'm kind of going to leave that for now. But ultimately, if you're an Elliott waver, you want to see really price not go further down below this level, which is wave 1's high. It should not dip down into wave 1 territory. You should see a nice reaction off of wave 1 high with maybe just a minor sweep kind of thing. So the more we hang out down here, the more I believe we're just putting in some further consolidation, and that's quite fine. It's in my opinion still bullish. We're filling up some of that inefficient balance in price here after this powerful move up. Okay, so we've got resistance above, but we do have support below. And like I said, once we start breaking this next area of resistance on the dotted line up here, I think that it'll start looking pretty exciting, almost as if it's in price discovery. It won't be, because clearly we have our all-time high up here, at least on this exchange. Okay, but like I said, I think this area is kind of not an area to be concerned about, and really I would just be looking at that prior all-time high candle close as either a target or next area of price suppression. But right now I see us consolidating, I see us putting in a correction, I see us well above the 100 exponential moving average, where here it's clearly respecting it as an area of demand. And another thing I'm going to bring up quickly is visible range volume. It's just an indicator that I do use. Okay, so now that I've got it up, there's a few things to note. Clearly you can see where volume on this asset likes to do business, and that is denoted by the green dashed line here in the middle. Okay, the other one is the purple line. Okay, that's hard to see. It's kind of just underneath the black line here. That's kind of your point of control. That's typically kind of your invalidation. If you're going bullish, is typically denoted by the prior low or area of consolidation on the lower end of that consolidation. So to me, that's a pretty significant level. If we zoom out here, it'll just adjust. Okay, so you can see in there on the dotted green line, pretty significant area where volume is doing business. Okay, generally this range right here. Okay, so a very important level that you might have expected to really reject price, which actually in fact it did at the time. Okay, so some deviations above here, but like I said, we're working with a range, not necessarily a precise line. And so originally, rejected at that area twice, consolidated further thereafter with then a powerful move to the upside, reclaiming that level. So I think that just doing some consolidation, even if we come down further, okay, doing some consolidation in that area is perfectly healthy and perfectly fine. Okay, now that I've covered the high time frame, we've basically stuck to the daily time frame here. I'm just going to drop down to some of the lower time frame. I have it on another chart. Okay, so here's the other chart and drill down to the 4 hour. Okay, so one of the things I do on the lower time frames is I mark out the weekly open and weekly close. So just to show you quickly, we've got the weekly open up here, the weekly close up here, and then the weekly close down here, and they're denoted in the dotted lines. So now that we've got those clearly marked, we will drill into the 4 hour. So it just gives us some perspective of kind of that range that we're working in. You'll notice that we actually have already, off of our weekly close, our weekly candle close, we've actually already retested the weekly open down here in the yellow circle. So very interesting, at least on this exchange. Okay, this is MEXC Global. We've already retested it. So that kind of gives you your range to work with. If you think of it as like the upper band or the range high and the range low, that really gives you that overall range to work in. But then drilling in further to the current range that we're actually chopping around in right now, basically playing ping pong in, we've got our range high up here, EQ, and then range low. And that was formed off of basically our swing low and our swing highs, okay? So ultimately, if you're drilling into the 4-hour lower time frames here, you could look for long setups on, this range low, take it up to the range high if you're looking for, kind of a scalp or a swing trade. But if you're expecting, a larger move to the upside, then you'd expect that this prior high would be broken. So your criteria for that really is a breakout of this range here, and then obviously a reclaim of that weekly candle close up here. But essentially, your first area of invalidation is a break of the range low. Okay, you don't want to be down here, but most importantly, holding the weekly open down here. Okay, on the dotted line, that's kind of your ultimate invalidation in my opinion, because if we lose that, we start to put at risk our macro higher low over here. Okay, so from this downward sloping channel that we broke out of, preceding the leg here that we're currently correcting off of is our macro higher low. Okay, so if you just zoom out and take a look at it, we've got the beginning of the impulsive moves, we've got our next higher low. Okay, so that's ultimately that macro invalidation of the uptrend essentially. So it's fine, we still have lots of room to work in, but you just need to have a bit more precision with your long entries and then make sure that you have those invalidation points. So ultimately, hold the weekly open, but for me, I'd be looking in this tighter range in here, keeping in mind that our low is actually down here. Okay, our low is down here off of this move. So we've got our highs and we've got our low. Okay, so there's quite a bit of room here if you're trading this on MEXC. I think it looks a little bit different. I think the wick comes down to maybe here on other platforms or other exchanges, but ultimately theory remains the same. If you're going long, you want to be longing down here in green, with some tighter invalidations, because ultimately if you just work with trend lines, like for me, if you just work with this trend line here, it is technically unconfirmed. Okay, we've only got 2 taps of it off of our initiation, but if you start to say, oh, I'm just going to set my invalidation or my stop loss below this trend line, I almost guarantee you're going to get stopped out eventually. If price just continues to do this and then it breaks the trend line and then it continues up kind of thing, it probably won't work out, or it doesn't work for me at least. And there's just too much of a gap between the trend and that current range that we're working in. Okay, and we did have the market structure break over here. Okay, so when we had the swing fail up here, we put in our high, we had that massive swing fail, then we put in a market structure break. Okay, so we had our higher low, higher low, higher low, market structure break on this big red candle, chopped at this level for a little bit, and then ultimately came down and then put in this current range swing low. So, for me, we are still working with resistance. It's not a guarantee that, the next leg is scheduled for next week kind of thing, okay? I just think from a technicals perspective, it fits the criteria, or at least fits my criteria. If you're looking long-term, then, you need not worry as much, in my opinion. If you're looking long-term, and at least if you believe in this asset, you can see what meme assets can do as of late. So I think that we shouldn't underestimate them. And from a technicals perspective, it actually doesn't look that bad at all. It looks pretty bullish in my opinion. Okay. So yeah, from that perspective, in the lower time frame, that's what I would be looking for an entry. Zooming in on this tighter range, looking at the area of demand, which is near the range low, clearly respecting it as support, trying to find those bullish order blocks. Okay, where is a down candle invalidated by an up candle, and vice versa, where is an up candle invalidated by a down candle? Okay, so we've got bearish order blocks here as an example. Last up candle invalidated by a down candle, acting as resistance, okay, on the following move. Another example right here, okay, a last down candle invalidated by an up candle, okay, this bullish order block, okay, ultimately retested on the following move there. And again over here, you're just looking for those order blocks where price is likely going to respect, trying to get a tight stop loss and tight entry, and then having your targets. Is this a short-term day scalp? Is this a mid-term swing trade? Or is this just a long-term position? Okay, anyways guys, I think we're going to keep it there for today. Thank you so much for joining. I really appreciate it. If you did enjoy this video, I'd really appreciate it if you smash that like button. And if you're new, don't forget to subscribe to the channel for future updates. And we'll catch you next time. Peace.